Hey guys, it's Brian again, coming back for the futures update. So it is now 8 o'clock my time, 9 o'clock Eastern. The regular trading hours get underway here in about 30 minutes. So doing our homework, figuring out what we're going to be watching, looking at for the day, what we're potentially trading for the day. So just going to share that with you. Let's run through this real quickly. I'm going to keep this around 5 to 7 minutes if I can. Man, it's hard for me to not just talk. But I'm trying to be concise with these updates going forward. So let's kick it off with the S&P. We're going to look at S&P, crude, and gold, and we'll talk about what we're trading there, potentially trading there, or maybe what we're not trading there. As I've talked about before, knowing when not to trade is just as important as when to trade, right? It's I always come back to that Kenny Rogers song. Got to know when to hold them. So starting with the S&P, we have a mixed bias. The 4 hour, the bias is long. And it'll be long really until, if we break down below 34.20, 34.15, the line is at 34.16. But remember, support and resistance, they're areas. So we draw lines, but it's an area. We can talk about that at another time. But really, until we break down and get below 34.20, 34.15, we still have a long bias. There's a lot of upside here, guys. There's a heck of a lot of upside. I know the bears have been coming in and saying, oh, we're about to go short, but keep in mind, these pushes down have been, a result of disagreements around the CARES Act, lack of, the criminals in Washington to get things done. So maybe they'll get that sorted out here in the next couple of days, and I think we'll see a rally on that CARES Act. If we don't get that in, there's a good possibility that we'll break down below 34.20, 34.15, and then that could take us lower. But for right now, we have a mixed bias. What does a mixed bias means? Mixed bias to me says, hey, sit on your hands. The 4 hours telling us we're long, 30-minute is telling us we're short. They're not in agreement. When we talk about the BTX method and we look at breakouts and whatnot, we're looking for, the first thing we look for is confirmation of direction. So S&P, we don't have a confirmed bias, so we're going to pass. Crude's the same thing. We go over here to crude, and we've got a 4 hour bias that's long, 30-minute bias that's short. It's just flipped over to short. So we're looking, again, mixed bias on crude. That said, we certainly could look at some support areas, if I could talk, down here that we could potentially be looking at bounces off of. But for right now, unless we bounce back up and break back above this 41.20 area, we've got a mixed bias on crude. Now, once the regular trading session gets going, if we break above 41.20 and our 30-minute bias is in agreement with the 4 hour, then we can start looking at potential trading opportunities there. We could look at breakouts above above 41.40. So we break above 41.40, that could certainly look at a buy opportunity there. The other method would be if we do break above 41.20, let's see if it pushes up, and then wait for a pullback to where we start making lower highs and lower lows off of that break higher, and then we could look for a breakout there as we make that lower high, lower low, and price breaks through that lower high. That would give us an opportunity to enter as well. But for right now, crude is a mixed bias as well, so that's telling us to pass. Gold's the only one that's in an opportunity where we have a confirmed directional bias. Gold has a 4 hour bias that's long. We've got a 30-minute bias that's long as well. That's telling us, hey, let's look at buying gold. We could look at that a couple of different ways. Just a straight breakout. We could look at 1930 here. If we break above 1930, that'd be our opportunity to get in long. Pullbacks, back down to 1920 would be the bounce area. And then, of course, there's the BTX method, which is what we're going to do, is simply wait for the market to start pulling back, making lower highs and lower lows. So, we're in an upwards trend. So we have an upward bias on the 4 hour, upward bias on the 30-minute. we'd wait for the market to make lower highs and lower lows, so lower high and lower low, and then we just simply trail our entry at the top of that previously closed lower high. And if a market, breaks back in the direction of its bias, then we're in long at that point and can take that on from there. All right, so that's it. Mixed bias on the S&P, mixed bias on crude, so we're gonna hold there. Gold is a long bias, so we'd be looking to trade long opportunities, either trade it on a straight breakout or use that BTX method, looking for a little bit of a pullback and then trade off a break of that previously closed lower high. All right, so that is it. My gosh, I did that in under 6 minutes. I'm so proud of myself. So we'll come back and in future videos, we'll talk some more about the methods. We'll break down how we're looking at market bias and what we're utilizing there to determine our bias in the markets and any other questions that you guys have from that point forward. All right, so that's it. Have a great day, and we'll talk to you later.